Hello and welcome. You're watching the Small and Mid-Cap Show. I am Hiral, Dadia, and with me is Hersh, Sayta. But let's quickly first take a look at what markets are doing right now. You have Nifty, which is at record high levels right now. 21,841 is where we are trading at, gains of around 0.9% coming in there. Interesting moves. Let's just pull up a 5-day chart as well, because you'll know the way the Nifty has gyrated over the week as well. It has been a broad range of around 21,500 to 21,800, which it seems that now we've broken 0.6%. There you go, are the only gains that we've seen this week. But today we're up 0.9%. Which are the stocks which are actually taking this up move today? And with that, if we can just first have the Bank Nifty as well on the screens, 0.7% higher. We're pretty much at that 47,750 mark as we speak in terms of Bank Nifty. And in terms of stock-specific action, Infosys, Tech Mahindra, Wipro, TCS, LTI, Mindtree. So it's the IT pack that is leading this rally in today's day of trade. And Infosys is a good surprise with moves little over 7.5% in day. M&M, Cipla, Bajaj Finserv, these are the top 3 losers that we're tracking so far. And you have Asian Paints, which is trading under pressure, Apollo Hospitals, which is seeing cuts of around 0.9%. The breadth in terms of Nifty is absolutely in favor of the advances as we speak. Around 21 advances versus 20 declines coming in there. Let's see in terms of Bank Nifty as well. Again, we are nearly at the day's highest levels. 10 advances in terms of Bank Nifty as well, led by a PNB, Bank of Baroda, SBI. You have ICICI also, which is seeing a smart move. In fact, ICICI last couple of trading sessions has been very strong as well. It's Axis and AU Small Finance Bank. Both these counters are seeing some bit of pressure. Hersh, overall, broader markets are looking pretty strong. I beg your pardon, the large caps and the benchmarks are looking pretty strong. What are you picking up with regards to broader markets?
Well, Hiral, one of those days where the broader markets are trying to play catch up. Of course, the benchmark itself is pushing higher. We are at life highs now. And the small and the mid-cap indices also trying to catch up. We are seeing 1/3% of gains with regard to the Nifty small cap index. Now, mid-cap too, well in the green. We're seeing around 1/3%, or 0.5% gain on the small cap, around 1/3% of gains on the mid-cap. In terms of some stock-specific action, Hiral, you mentioned how the IT pack is really leading the charge. I won't mention that. But you have the likes of AG Infra, Polycab, both of which are up 3% plus. Polycab, I won't get into AG Infra on the back of an order win. You have TARC as well, up 2% odd. Among other stocks, you have a 5 Paise Capital, which is actually down 6.5% on the back of numbers. You have the likes of Bansali Engineering, which is up again 3+% on the back of capacity additions being cleared by the government of Rajasthan. So you have all of those in focus, Hiral. But let's quickly move on. We have with us Kalyani Steels, which was declared as the successful bidder for acquiring Kalyani Steel and Power in a cash consideration of 450 crore rupees. We had R.K. Goyal, who is the MD at Kalyani Steel, and he's joining us. Hi, sir. Good morning. Sir, talk to us about this acquisition. What does it bring to the table for you? What does it mean for the company as a whole?
Good morning. Actually, these assets were available since quite some time. They are pretty good assets. And we have purchased the assets only, which is plant and equipment and the land. It's a melt shop, basically, with 60-ton heat size, and should be able to produce around 0.36 million ton of steel.
Right. So overall, if you see from this acquisition perspective, what are the kind of synergies you're looking at? Because clearly the assets that are coming in is in the form of land building as well as plant and machinery. How strategic is this going to be from a business perspective?
We have to do a lot of addition of facilities, including the rolling, including some iron making and all, so that this plant can be operated profitably. We are working out on all those things, including we will be targeting to produce largely green steel for which we are going to have a big market. And incidentally, just to inform that we are the first one and the only green steel producer in the country. We have a capacity to produce green steel 250,000 tons in our Pune plant, which is under the name Sarlo Advanced Materials Private Limited. So this plant also, we are just working out, finalizing the configuration along with all our European and American customers, and we'll start implementing the balancing equipments.
Right. So the acquisition completed by roughly May is my understanding. When will you kickstart operations? That's point number one. Point number two, when will it start adding to your top line and by how much?
We have to set up a rolling mill, which is a long-term process, which takes a minimum 3 years of time. So by the time we add all these equipments, it will be definitely more than 3 years' time. Meanwhile, we look at the possibility of whether we can start operating just the melt shop and find market for edge cast products.
Right. So, as you're saying, it's going to take you 3 years to have 100% operations on track. What's the kind of revenue contribution are you looking at on the back of this acquisition in the next 3 years?
We are currently producing around 250,000 tons in our Hospet plant and having a revenue of around 2,000 crore. It will definitely be in proportion of that or a little more, because we'll be able to produce much higher alloy grades in this plant.
Right. And how will margins shape up in your view? I know we're 3 years away. But is this business expected, because you've already acquired it, you would have probably done some back of envelope calculations. Is this largely a margin accretive business which you are buying from a capital perspective? Is this going to be accretive for you from an ROCE perspective as well?
This plant has a capability or will have a capability to produce many of the exotic products in terms of grades, properties, and sizes, and definitely it will fetch much better realization.
Okay, so what is that realization trend expected to look like? Because clearly from a business perspective, we've seen FY22, which has been the strongest with regards to top line as well in the last 5 years. Do you think you will be able to beat that number in 24 and 25?
No. As I said, it will take more than 3 years by the time this plant is operational. So we are talking of something like 27, 28 or something beyond that. And but then since we'll be able to have a very different and diverse product mix, our average realization will be far higher.
Okay, so another question on realizations that I have is, you have started with a coke oven plant as well. What's the utilization there, and how will that also help you improve your realizations and in the end overall from a margin perspective?
It is doing quite well. We are able to utilize it to the capacity, and definitely it is helping us in improving the margins. But then the margins or the incremental profit depends on the relative price of coking coal and coke. But today in India, the situation is coke is not available as much as it is required. And since coke is not available, it's a great investment because now we are able to produce in-house.
Okay, so if you have to take coking coal, coke prices as well as iron ore, which becomes the key raw material, how are you seeing the price trend for all of these? And in turn, by how much will you be able to save from a margin perspective?
Last few months, this cost of iron ore or prices of iron ore as well as coking coal has gone up substantially. And that means the overall cost of steel has gone up, which of course we have taken up with our customers. But I'm sure we will be able to get at least whatever the cost increase, and we will be more than able to protect our margins.
Right. And, what kind of demand traction are you expecting to see? Because from where I see it, currently Bharat Forge contributes roughly 30% to your top line. How is the growth both internally within the Bharat Forge or within the current clientele, and what are you doing to go beyond that? Are you planning to add clients? Are you planning to reduce reliance on such a large client? How should it shape up?
It's a very interesting and very good question. As I mentioned, our major focus is in production of green steel. We are one of the producers with the least embedded CO2 in our steel in our Pune plant. And exactly same thing we are going to do in the new acquisition, and maybe better than that. And that opens the markets for us in Europe and US, even at a premium. Like you are aware that CBAM will be implemented from 1st January 2026. And afterwards, we will definitely get a premium on green steel. So this is the project which will serve the global market, and we will definitely get premium of very low CO2 embedded in the steel.
Okay, so that's with regards to, the segments that will drive business from a global market perspective. If you have to talk within India, which are the segments that will be major drivers? Because taking Bharat Forge into consideration as one of the key contributors, yes, automotive is there. We are seeing a lot of boost coming in from a construction and infrastructure perspective. Railway as well, the budgets have been increased as well. So how are you seeing that segment pan out for a Kalyani Steel? And do you see the growth coming in from there?
Definitely a huge growth is coming up from railway. That is one part. Second part is passenger car is growing very well. Commercial vehicle growth is marginal, but it is expected and it will grow much faster because now the capex from private sector has started happening. As you are aware, a lot of investment is happening even within steel. As far as some other segments like tractor and all, yes, the market is down. But by and large, the economy is doing well and it will do well. And things will happen much better because of the capex cycle starting from the private sector.
Right, sir. One final word with regard to your numbers itself. How should one see the numbers evolve both in the short term, say FY25? What should the kind of growth number be like versus the first half of this year? And where should we go in terms of margins, both in the short term as well as in the slightly longer term as you start to integrate some of these businesses?
I would not like to speculate, but definitely we will be able to protect and do better than what we are doing currently. And once the new project is implemented, definitely the profitability and margins will go.
So, sir, can we try and put a number here? So we are currently at roughly, we are at a run rate of roughly 2,000 crore annualized. Would you expect a 30% growth on top line? Is that a fair assumption by FY25?
So once the new project start producing and we are able to utilize the full capacity, then it will go up by 150%, which means more than 5,000 crore.
Fair point. Right, sir. It's thank you so much for all of that perspective. It's been a pleasure speaking with you. Thank you so much. That was, of course, the Kalyani Steel, the management of Kalyani Steel, who we spoke with regard to their most recent bid for acquiring Kamineni Steel and Power, and that's for a consideration of 450 crore. But time for a very short break. We'll be back to talk to you with regard to UGRO Capital. We spoke with them. They've got an RBI registration certificate for factoring business, but really today the stock is a buzz on the back of very solid numbers, and that's what we've spoken to them about. So stay tuned. UGRO Capital on the other side. Welcome back. You're watching the Small and Mid-Cap Show here on NDTV Profit. We'll continue interesting conversations, and we have with us the management of UGRO Capital. Very solid set of numbers with regard to their provisional Q3 update, which they've posted. Stock, of course, up and away, 4.8% higher as we speak. We have Shachindra Nath, who is the Vice Chairman and Managing Director at UGRO, to continue this conversation and to try and break down some of these numbers which they've posted. Welcome to the channel, sir. It's a pleasure having you. Sir, to start off, wish to understand your AUM growth remains quite robust, but I see your prime secured book has seen a sequential degrowth. Why is that so? Talk to us about that, and what's aiding the rest of your book, especially your micro loan book, which seems to have grown very, very well. So could you give us some perspective on all of that?
Yeah, thank you, Hersh, and thanks NDTV Profit for taking us. I think before I answer this question very quickly, a little bit of background. As you know, UGRO is India's first listed startup. We started by acquiring a small listed company in 2018, raised 1,000 crore of capital, then suffered the liquidity crisis of IL&FS and DHFL. Our first year was 2019-20, and then COVID came. During all of this period, we very heavily invested in both our data infrastructure plus physical infrastructure. From 120 people in 2020, we have grown to almost 1,500 plus people, 9 location to 120 plus location, 105 location at that time. And that has led to the growth because we created a very large base for our customer segment, that 15 lakh to 15 crore turnover segment. And that's why in 2022, we were 3,000 crore, 23, we were 6,000 crore. We are 8,300 crore in the first 3 quarters of this financial year. With respect to your question on the portfolio mix, for this customer segment, we focus on all kind of customer need, whether it is secured term loan, whether it is micro enterprise loan, machinery, supply chain financing. Our idea is to keep around 70% of our book secured by some form of a collateral, predominantly physical collateral, but also provide short-term unsecured financing for customers who need immediate financing. So as a strategy, we would like to keep our portfolio in the mix of 70-30. And in that, given we are now very heavily focusing on the retailer financing segment, the machinery segment, the business loan segment, little bit of volume pickup is happening on that segment. But as a portfolio risk perspective, I think so we are in the same way as we were around a year back.
Right. I'll come more on the unsecured, piece, but I currently want to understand you're at 8,000 odd crore. How confident are you of achieving your 20,000 crore AUM target in the next 4 to 6 quarters? And, with regard to your loan mix itself, you said you wanted it to be 70-30. Will that be the loan mix in favor of secured, of course, even when you hit the 20,000 crore mark?
Yeah. So I think so we have said that, the number of 20,000 crore is a number which is aspirational. That only gives an indication that UGRO is designed and set up to build an institution in itself when it comes to small business financing. Because what we have seen in last 2 decades, that when it comes to consumer financing, we have one large leading player. For second-hand vehicle finance, we have one large leading player. So as for gold loan companies. But for MSME financing, there is no market leader, and the opportunity and the need is very high. And that's why we keep saying that we would like to build a large institution. What would be the exact size is a function of how the market is and how we continue to grow. But obviously that is a target number now. Whether you can always have a quarter, 2 quarter, variation in terms of a number. With respect to the broader strategy of how we will build it, when we started, we focused largely on prime customers, secured, ticket size of around 1 crore. Now, with every passing quarter, we are growing our bottom of the pyramid business. Our micro enterprises infrastructure is growing from 75 location. We are now going 150. Our retailer financing tech and data analytics platform has grown. Yesterday, we got our factoring license, which allows us the capacity to now do a lot of receivable financing. So we think our granularization of portfolio would expand. Today we are at 70,000 customer base, and we are now targeting multiplier of that in terms of number of customers. But broadly, we'll be in this range of 70-30 for all the through till 2025.
Sure, point taken. And, with regard to your customer count, you suggested customers at 70,000 now. Where do you go by 2025? Just trying to understand what kind of growth path you're chalking.
Depends. I think so. We are, and I'm quite hesitant now quoting a number. But once you quote a number, obviously that number gets in public domain and people start tracking you from that. But I think so. It would be at least a 5x multiplier of our current customer base in next 12 to 18 months.
Well, that's strong, ambitious, but could you also give me some flavor with regard to where this kind of growth is coming from? 5x. Is it because of you expanding in different geographies? Is that how you're seeing it? Is that what will really capture this new growth coming through?
Yeah. So I think so. Today we are operating, our top 27 location operate in 8 states. Balanced to 75 location operate in 5 states, which is Telangana, Tamil Nadu, Karnataka, Rajasthan, and Gujarat. We are expanding our next 75 location in the next quarter or so in UP, MP, and Andhra. So first base of portfolio of secured micro enterprise business would come from these expansion, but the number of customer expansion is happening on threefold. One, we are now heavily focusing on our retailer financing business as a part of our ecosystem financing. Second, we are expanding our partnership and alliances channel where we continue to partner with multiple types of fintechs and small NBFCs. And third, our GrowX platform, which allows us to do a very small merchant financing business, would also expand the customer base.
Got it. And, I want to try to understand some of the trends which are playing out in lending, because you've had the RBI tweak RWAs. So both on the lending as well as on the borrowing side of things for you as UGRO Capital as a lender, have rates started to inch up? How are things on the customer side of things? Is there an appetite for these higher rates? And how is liability really in terms of the mix really shaping up and going to shape up?
First and foremost, I keep saying this to every friend of mine in the media world, that please differentiate between an unsecured loan and what is an MSME financing. RBI, when they said unsecured consumer loan and unsecured personal loan. So they are that is completely different than what we call the MSME financing. There has been a very heavy buoyancy when it comes to the consumer financing and unsecured personal loan, and risk weight has been increased on that. When it comes to MSME financing, the entire focus of the government and the regulator and the banking system have been to provide non-collateralized loan to MSMEs, because that has been the biggest challenge in India. And that is why you have a credit guarantee scheme, which has now up to 2 crore and actually up to 5 crore. Unsecured financing is guaranteed by the government through credit guarantee scheme. So there is neither a risk weight increase, nor there is an intentional or directional way of saying that MSME financing should be curbed or reduced, because there is a difference of when you do a loan to a business, it is a productive asset financing, because that loan actually increases the volume of the small business, improve the employment, so on and so forth, and it is economic productive activity. So that is the part one. I don't think so there is any challenge. The entire focus have been to increase the penetration of MSME financing in India. The credit gap is 85 lakh crore. Only 20% of that is formal. For many number of decades to come, this would remain a key focus for everyone in the lending universe. With respect to the risk weight increase on the lending from banks to NBFC, now it is true that 85% of the banks lending to NBFC is actually consumed by top 10 NBFCs in India, which are public sector NBFCs and some of the large AAA NBFC. But consequently, when such thing happens, the middle layer and a smaller, medium-sized NBFC also get hurt. With respect to us, from day one, actually, we have realized that unlike some of the large AAA players, we don't have the ability, or we should not have the ability to only depend upon the bank borrowing. So today, our liability is bifurcated. We actually only 42% of our total liability is from the banking system. We are one of the prominent player who attract DFI financing. Some of the largest DFI in the world actually lend to us. We are also active in public market debt raising through public issues. And also we are the leading player with respect to the co-lending. So we substitute on-balance sheet borrowing with co-lending, and that's why of the large number of banking system, more than 9 or 10 banks are co-lending partner, and 50% of our book of 8,300 crore is in form of co-lending. So we don't see challenge for us, neither we see the customer rate because of this risk weight for MSME financing going up in next 8 quarters or so.
Interesting. Thank you. I fully appreciate that. And, with regard to your growth, you continue to grow extremely robustly. Could you talk to us a bit about your equity fundraise plans? When does that happen? What are plans looking like going forward? Because as you grow your book from 8 to, say, 20, if you do get there, you will require an equity fundraise.
See, UGRO is, Hersh is a completely, we pride ourselves, we are an institutionally owned, independently supervised and professionally managed platform. When we started, this was the first time wherein I took over a small business, and as a founder of the business, I got myself diluted down straight to 3% because I raised significant capital from 4 large private equity investors, other institutional investors. We did another capital raise in which we brought Denmark government, some of the large public institutions in India. And I think so as we'll end the year and immediately a quarter after that, we would take one more large capital injection. But our strategy this time is to try tapping the real public market and not go back to the private equity or some of the sovereign fund so that the liquid float of the company goes up. So we are gearing for that. And as we think that it is accretive to the shareholder, the pricing is right, we would tap an institutional market raise.
Interesting. One more large equity raise, as you call it. It's been an interesting chat. Thank you so much for all of that perspective, sir. And thank you for coming to NDTV Profit and speaking with us. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. From Hiral, myself, and everyone who puts the show together, thanks so much for watching.